Right, so in this video we will discuss about directional bias for swing trading. I will be showing you the exact technique and the tools that I made use of when I predicted the move of gold into the 2000s and the move for silver, and also I used this in predicting the move on pound and for the euro. So I'll be giving you that exact skill right in this video. Okay, and even if you are not a swing trader and you do more of day trading, you still want to stick around because this is going to be very beneficial to you, as I'll be showing you one simple tip that you can use in finding high probability day trading bias after establishing a swing trading bias. What is the first thing that I make use of when I'm trying to frame a directional bias? The first thing that I make use of is called the seasonality, and some people call it seasonal tendency. So what it means is using historical price trends to predict what the future price trend is most likely going to be. The second tool that I make use of is the higher time frame price. So what I'm doing here is I'm consulting the higher time frame to see where we are trading at. Are we at a point where we're expecting price reversal based on the price setup, or we're at a point where we can still expect price continuation? And so the next thing that I make use of, right, in finding my directional bias is the COT data. The COT data tells me about how the institutions are positioning themselves. And then the fourth tool that I make use of in guiding me in finding my directional bias is market flow analysis. Now, what market flow analysis means, how different markets, different assets and asset classes are related, and using that understanding to find out where value is flowing out of and where value is flowing into. Now, when you make use of these tools this way and when they are aligned, they give you very powerful signal. So when you make use of them, you are going to arrive at two key things. Number one is that you will have a defined range of opportunity. So in other words, you meet price at some point, and based on the setup of all these different tools, you now have an expectation of where price is going to. So that will lead you to a defined range of opportunity, an unfilled price range where you are expecting price to fill. Then the second thing that you will get automatically is the point of invalidation. Now, point of invalidation here can be based on the price. Point of invalidation can also be in terms of time. Okay, so now let me give you an example of how you can use all of these and how they can align to give you very powerful signal. This is the very same methodology that I used in predicting big moves in the market just recently. So our example is going to be taken from Canadian dollar. Okay, so the first thing that I will look at, just like I pointed in the overview, is the seasonality. So these three lines right here are showing us the seasonality of the Canadian dollar based on the 15-year historical price data and 10-year historical price data, and then also the 5-year historical price data. So what is seasonality suggesting? So based on this right here, seasonality for Canadian dollar was showing that we should see a price top formation in the month of July. That is the latter part of the month, and then we should see a drop down into the month of August. So let's go forward. The next thing that we want to pay attention to would be price. Where is price trading at? Now, this is the month of July. We are seeing that price trading at a real Canadian dollar supply. Now notice that this is USD CAD, and because Canadian dollar is the quote currency right here, so if we have the price of this pair moving upwards, it simply means that Canadian dollar is going to be weak, just as the seasonality was suggesting. So now we are expecting that USD CAD should rally, which means that Canadian dollar should weaken. So now we are trading inside a Canadian dollar supply, which is actually a demand zone on the USD CAD. Okay, so don't get confused at all. So that's where price is trading. It's a good point for us to expect a reversal happening from. Okay, so based on this, we can now say we are expecting a push higher. Now, in case you don't understand what real supply or real demand is, you can go back and watch one of the videos I posted here about how to find supply and demand zones using the COT data. So the next thing that we want to pay attention to definitely should be the COT data, how the institutions are positioning themselves. So looking at the COT data, what we have for Canadian dollar at that particular point in time in the month of July going into August, that latter part of July, we started seeing that we were having an overbought reading for the Canadian dollar. You can see the reading right here is 100. In the last week of that month, it's 100. And then also at that same point in time, we had the maximum reading for total long sentiment of the large institutions over a 3-year period. So the 3-year max reading is 143 and still 143 up to this point in time when I was recording this. So that is telling me that the institutions are setting themselves up for profit taking on the longs for Canadian dollar, which then should cause Canadian dollar to drop in price. And this also is now in line with our expectations based on seasonality and price. So now the picture is now becoming much more clearer. Now, one more tool that you can use in trying to understand or have a clearer picture of what is going to happen in the market or what's going to happen for a particular instrument is the market flow analysis, where you are looking at the correlations or the relationship that exists between different asset classes or different instruments, and using that understanding to spot where value is flowing out of and flowing into. So for this market, right, we're going to look at two instruments, the euro and the pound. Now understand that our setup right here is on the USD card. In that pair, we're looking to sell the Canadian dollar but looking to buy the US dollar. So based on the setup of the seasonality, the COT data and price, Canadian dollar is expected to be weak. But what about the dollar? Now we can use the euro and the pound to understand if at that particular point in time we are going to see, or we are seeing the possibility of value flowing into the dollar. Now, in the build up to that particular point where we are expecting to see the bearishness for Canadian dollar, which then means that we are looking for bullishness in USD card, we saw euro come into an overbought reading. So euro came into an overbought reading, which means we are expecting to see profit taking from euro. Now, if there's profit taking from euro, the value from there should flow into the dollar. So at that same point in time also for the British pound, we also saw that there was overbought reading for the pound. The 3-year reading also is showing that this was the highest they've ever been long. This was the highest long positions or long sentiment they've ever held in the last 3 years. And we also seen an overbought reading in the 26-week COT index. Now, both the euro and the pound, based on the COT data, is suggesting that we should see profit taking on these two instruments. Now, if you understand the nature of the British pound and the euro, you would recognize that they are dollar substitutes. So whenever they are losing value, that value will flow into the dollar. So based on this market flow analysis now, we can expect value to flow into the US dollar during the same time we are expecting to see Canadian dollar go down, right? So this therefore means that USD card is set up for a bullish move based on our 4 indicators. We're expecting price to go higher. Now, if we're expecting price to go higher, where is it going to reach for? Now, I've taught already in this channel, in this YouTube channel, that there are only two things that price will move towards. So number one is liquidity, and the other one is imbalance. Okay, so in this picture right here, as we're expecting price to move away from here and go higher, we have to look for where we have imbalance. So first we have this imbalance right here, fair value gap, and then we also have this double top formation right here. So first thing for me is price should reach for this fair value gap. And remember, this is a weekly chart. Price should reach for this fair value gap, and then ultimately we are looking for it to trade into here, and then after that we can know whether we would continue or not. Okay, but this actually gives us our defined range of opportunity, a price range that is yet to be filled. Now, what would then be our point of invalidation? Very simple. Our point of invalidation definitely should then be the low of this demand zone for USD CAD, which is a supply zone for Canadian dollar. As a day trader, here's the tip that will work for you, and will make this very useful for you. In order to find a high probability directional bias as a day trader, you have to wait on the daily chart for the swing formation to align with our expectation. Right, so this is exactly what happened for Canadian dollar. So after hitting that real level of supply in the month of July, just as we were expecting based on what the seasonality, price action, the COT data, and market flow analysis were suggesting, we saw this low formation for Canadian dollar and USD CAD, and then we had the rally into the month of July and higher. And here is what happened for the pound. So the pound also during that time made a top formation. So based on what the COT was showing us, that we came into an overbought for the pound, which certainly suggests that they should be profit taking, and so we'll be expecting to see downward movement in price, and exactly that was what happened. Price for the pound also came into some real supply level, and then from that point on it began to drop. So this is exactly how I get to understand the bigger picture of the market, and it helps me to frame powerful setup for swing trading, and also understanding what I should be doing when I'm looking to day trade. So that is it for this one, guys. Do me a favor, if you like the video, please click on that like button, and if you're not subscribed yet, please subscribe. And if you have a community that you feel this is going to be helpful for, you can share this, okay, to help the channel. So cheers, and God bless you.